Hello and welcome to another update video about Ethereum. So only in the last video a few hours ago we spoke about here this wave 2 setup, a 1-2 setup that could eventually take us down here to around 1400, 1411 is the ideal target, the 1.618 extension. It depends on how high we eventually go in the wave 2. I mean, I mentioned in the last video, also shared it on Discord, Telegram. I think we even put this setup on Twitter today, that we have a 1-2 setup here. And this is, of course, in this case, a short setup. So for now, it seems to be following through, and anybody who used it, who entered, could now move the stop loss into profit. It was already quite a profitable one. We touched the area twice, actually 3 times with 3 candles. Here we went into it, and I think just in time I updated the scenario earlier today when I made the last video, because now we are turning around. And I mean, I have no idea if this is now already the third wave. Certainly looks impulsive, but bear in mind the wave 2 can extend out easily to 1634. So what could happen is that we are coming down here in a, so did I say the wave? Well, the wave 2. The wave 2 can easily get to that level. It could even go higher, but then at that point it would become unrealistic that it's still a wave 2, because it's all based on the measurement of Fibonacci levels. It's all mathematics. We love it. Here. 1635 pretty much. Yeah, if it gets above that level, it will be unlikely that it's still a wave 2. Even though it's still possible, it doesn't get really invalidated until it breaks above the 1660 level, yeah. But again, experience shows that if we have such a double top, normally it wouldn't hold, yeah. Normally you would then break through eventually, yeah. So it's like 90 or 85% of trades fail or setups fail if they go above or below, if we were in an uptrend, the 78.6 fib. So when that fib level fails, I can't trust the setup anymore. Which means that something like this is still on the table. So we could get, and then people would talk about a fake out or something, we could get something like that, A wave, now maybe a B wave down, yeah, and then a C wave to the upside. That is still possible, which would be great for anybody who wants to enter that short setup again, because what you can do, you can now move the stop loss into profit or to break even. Again, that's the advantage of having a pullback trade versus a breakout trade. In a pullback trade, you normally have a good likelihood of it working out, because even if the setup in the end doesn't work out, like here, it would still come back. You can still, as soon as the price leaves your area and, goes into your expected direction, you can move up your stop loss. In this case, you move it down, obviously, bring it to break even or profit, and then you can just relax and watch it and go to bed or whatever, and let the trade run, yeah. Or you use a trailing stop loss, you can do that as well. That's entirely up to you. Or you don't use a stop loss, but in a short trade I would always use one. So in a long you might not necessarily need it, if you don't have leverage, but it's entirely up to you. So yeah, it could still be a flat pattern here. Looks like a 3-wave move to the upside, which obviously could be the completion of the wave 2, or we get a more extended wave 2 in an ABC. Which means that I can really only confirm that the wave 2 was in if we break below the low of the wave 1 at 1535. Until then, it's assumptions. At the moment, looking at the price action, I mean, I would assume it's in, but it's too early to say really, especially with what's coming tomorrow. It will be interesting tomorrow, Fed interest rate decision, yeah. So there will be a lot of volatility tomorrow, yeah. Few people ask me, I talked about volatility, Fed interest rate decision. It's the same with CPI. Few people ask me, what would you do? Would you go into a trade before? Or see, when you trade and you want to trust your setups, a lot of traders prefer to stay out of the market until the dust has settled, because it's just not predictable. Yeah, if you want to have a bit more of a speculative, more like gambling sort of trade, then yeah, you can enter a trade, of course, beforehand, but just be aware, a lot of traders just leave the market before that expected volatility, because it can go, it throws stop losses out, it just sort of goes up and down a few times, and then it's sort of unpredictable, because first of all, you don't know what the actual message will be. I mean, a lot of people expect 25 basis points, but it could still, be something different. But let's say it is 25. Probably it's priced in. So if it is 25, it might just carry on as it is. But again, we don't know. So that's why sometimes better not to be in the market at all. And you basically accept that you might miss a trade, but there are trades every day, so you don't really miss anything. So yeah, if you want to have sort of more predictable trades, trade your plan and maybe stay out of the market tomorrow. But on the other hand, it's an opportunity. If you put a bit of money in and it suddenly is very volatile. I mean, volatility is where you make the money, right? But you can also lose a lot. So make sure you've got, especially in these today, tomorrow, risk management is very, very, very important. Okay, but yeah, if it now plays out, it should break below previous swing low here at 1561. I mean, that is next support. And then below the 1535 level, if we break below that, next support would be around the 1500 mark, in my opinion, which is that larger fib level that is the top of our large box for the fourth wave. And eventually, if it all follows through as we've got it on the chart at the moment, it should take us sort of into the lower half of that green support box for the green wave 4, which could eventually lead to a green wave 5. Don't really want to talk you through the different possibilities here in the short term, because there are so many different possibilities. I think at the moment it's just straightforward to focus on this short trade setup. And if it gets invalidated, we know that this was not the correct counter, we're in something else, but that doesn't really matter because the setup worked out. So, if it now fails, basically everybody was in profit, basically, if you follow the setup. So of course, up to you if you do it, but then we just have to redo the waves, because in a corrective structure, which this might still be, different wave patterns are of course possible. You could still count this as some kind of a strange triangle, for example. But then, as I said before, in corrective waves or in ranges, you can get dozens of different wave structures, so there's no point talking through them all. As soon as we identify a possible trade setup, it's worth mentioning it, and then you can decide if you act on it or not. But yeah, that's sort of the update at the moment for Ethereum. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.